When a CEO with a terrific long-term track record comes on this show and tells you his stock is being misjudged by the market, you better sit up and listen. Roughly 3 months ago, back when the price of oil was still languishing in the mid to low 40s, Core Labs reported what was widely viewed as a disappointing quarter, and its stock, which had already been more than cut in half over the previous 9 months, dropped 10.7% in a single session, down to $89 and change. Now, regular viewers know that I view Core Labs as the scientist of the oil patch. The company uses its technology to analyze rock and fluids in oil reservoirs so that its clients can increase production, in part by helping them figure out both where and how to drill. Now, after that very session in late January, where Core Labs got slammed, the company CEO, David Demscher, came right on this show and basically called the bottom. Sure enough, he nailed it. Since then, the stock has given you an astounding 40% return in less than 3 months. It roared yesterday, rallying nearly 10% after Core Labs reported better than expected results. Even though the numbers were down big from last year, they were much stronger than Wall Street had feared, especially given management's optimistic guidance for the next quarter. Of course, Core Labs has now had a monster move at this point, and even though the price of oil has rebounded nicely off the bottom, it's still well below, though, where it was a year ago. So as the stock finishes bounce, or does it have more room to run? Let's check in with David Demscher, the chairman and CEO of Core Labs, find out more about the quarter and the future of the oil patch. Mr. Demscher, welcome back to Mad Money.
Hey, Jim, thanks for having us back on Mad Money, and congratulations on the nuptials.
Thank you very much, David.
She must be some kind of woman.
Oh, yeah, she can handle this train wreck. She's quite a gal. All right.
Absolutely.
Let's get right to it. One of the things I found was incredible is in your key reservoir description business, which is so important, we talked about it a lot, that if you use constant currency, you would have had, I find this unbelievably, you would have actually had a better year over year than the previous. How are you able to make more money than last year with oil basically cut in half versus last year?
Well, that is correct, Jim. On a constant currency basis, revenue would have been up 3% in that division. And if you look at the makeup of that, that is a very international-based business and very concentrated in large-scale crude oil and LNG projects around the world. These projects tend to go on through high and low oil prices because they are decadal in length and multi-billion dollars of investment. So reservoir description concentrates on projects internationally that are oil related, and that's why it has such a resilient revenue stream.
Now, but in the United States, that's not been, we've had some drop off, but you're really out there. And I got to tell you, you did call the bottom of your stock last time, so I'm listening. You gave some forecasts at the beginning of your conference call where you just say, listen, you see a V-shaped recovery led by higher commodity prices. You did not hedge on this. You just said outright that the declines in drilling in the United States are going to produce better pricing by the end of the year.
That is correct, Jim. If we look, as we speak, the U.S. oil production is rolling over. Right now, we're producing about 9.2 million barrels per day, and we predict by the end of the year that that's going to actually fall below 9 million barrels a day. So year over year from 2014 to 2015, actually, U.S. production will go down. That'll be led by the shales. Remember, these have very high annual decline curve rates of 70% in the first year, 40% in the second year, and 20% in the third year. When you look at about a 5.6 million barrel a day base with those kind of decline curves, it doesn't take long when you cut the rig count in half to get a fall in U.S. production. Moreover, around the world, we're going to start to see the amount of crude oil produced roll over as well. In Russia, we're starting to see declines, and recent gains in the Middle East probably are not going to be scalable long term. So net by the end of the year, we ought to see a very tight crude oil supply and demand market, higher crude prices with a V-shaped recovery in activity led again by the shales in the United States.
Now, given the fact that you talked directly about how demand's also increasing, are you looking at something you could go to 70, 80, 90, that somewhere in that range?
Yes, Jim, if we look at Brent crude prices and WTI crude prices on a constant dollar basis year over year, right now Brent would be $78 and WTI would be approaching $62 a barrel. So remember, there's a dollar strength component in there. So by the end of the year in constant currency, certainly we would have crude oil Brent up in the 80s and we'd have WTI pushing 70.
At the same time, some of your businesses are more important than ever. For when you have an oil company and it's trying to do high grading, try to figure out where the best properties are, you call in Core Labs to figure that out, right?
That is correct. When you look at the recovery factors from these shales, Jim, they're below 10% right now. Our mission is to get that recovery rate to 12, 13, 14%. And if we can do that, the return on their invested capital in projects like that skyrocket, opening more areas for more exploration and production from these shales. Globally, the natural recovery rate's about 40%. Hiring Core Lab, we can get that up to 42, 43, 44%. And on billions of barrels in the ground, when you add a couple of 300 basis points, you're talking about a lot of crude oil and a lot of free cash flow for our clients.
Well, it also seems like it's good free cash flow for you. I see that you yielded $72 million in free cash flow, which was the most for any first quarter in Core Lab's history. So obviously there's many parts of your businesses that did not turn down, despite the fact that oil came down a lot.
Yeah, that's correct, Jim. As you know, we have a lot of high-margin technologies that we put out around the globe. Moreover, we did harvest our balance sheet with a lot of the receivables coming in. We turned 34 cents of every revenue dollar into free cash, which is probably the highest in all of oil field services.
Well, I know that's why you're at the top of that Bloomberg cohort. Let me ask you something. One of the things that I know that for national security purposes, a lot of European companies are very concerned. Europe's concerned about Gazprom. They're afraid about being cut off. When you say that LNG are long-term projects, are some of these projects necessitated by the fact that the West does not want to be hostage to Gazprom?
Well, if you look at Europe, they should be doing more to develop their own internal gas supplies, natural gas supplies from their shales. A lot of those countries have banned fracking, and certainly for them, LNG will be the answer. We have some big LNG developments in the Eastern Mediterranean off of Israel, and if you look at East Africa off of Mozambique, again, really giant LNG projects, hopefully to deliver that over the next several years into Western Europe to lessen the need for the import of Russian gas.
So you know that Leviathan field, the one off of Israel?
That is correct, Jim. We're doing a lot of work on the Leviathan field. It's a multi-trillion cubic feet of gas in the ground, and it will produce over the next 40 or 50 years. It's a game changer for all the countries in that area. There also have been some large discoveries in the Nile Delta by BP, and that gas will be domestically used into Egypt.
Wow, you're ahead of the curve, no doubt about it. Well, David Demscher, I want to thank you for calling the bottom, because that was a great 40% gain you gave our viewers. David Demscher, Chairman and CEO of Core Lab.
Thank you so much, Jim.
Thank you so much, sir. I don't know anyone who would know more than David. Maybe Rich Kinder. I don't know. Maybe Mr. Mears. But, boy, David's really bullish on oil. That tells me I think it is going higher. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.